In the markets now, I'm Michelle with Brad Kooima of Kooima Varilek, and we're seeing a lot of green on the board this morning, with the exception of a few of the hog contracts. And Brad, thanks for joining us. Obviously, we're happy to see the futures, cattle futures, back to the plus side after some record cash trade. Congratulations! You and I have been talking about $200 cash trade for a while, and I think congratulations are in order for you.
That's very kind. My goodness, more than I deserve. Thanks for having me on. I always enjoy this program. There's several commodity sayings people say, right? Even a blind sow finds an ear of corn now and then.
Right, right.
Yeah.
But still, record cash trade in the north. You certainly can't deny that.
100%. No, it's fun to see the market finally respond to what seemed to us to be a very, very good fundamentals, and then it comes back to my belief that it is important what Iowa does, and it is important what the North has in terms of supply. We've gone through this. It's important because we actually negotiate our cash cattle, and they're not formula priced, they're not turned over, they're not turned in. At least a large portion of our cattle are that way. So it is important when the supply is snug. And I think what's particularly important right now, Michelle, is there seems to be a perception out there that there is going to be a lot more cattle in the first quarter than there was in the fourth quarter.
Right.
I don't see that at all in my territory here in the north. Now, maybe it's a way different story in Texas and Kansas. Maybe it's a slightly bigger, but that's normal. That would be very typical of what the seasonal supply would do. But the difference here is, I think that when we place these high-priced yearlings in the summer, in August and September, and had marked them off as a loss almost before we even got to them, right? And now we're selling them at a profit, and we're selling them like nobody's business. I think we're actually pulled forward in the north, and the weather's been great too. So that's allowed us to pull these cattle forward. So I really like the way the supply side of the fundamentals feel here. I really, really do.
All right. So recap for us how high cash did get here, especially in the north on Friday. It looks like we're going to take out the 5-area weighted average record from back in July, which was just a little over 197, don't you think?
I would say easily, based on what happened in the north. Without saying the Packers' names, I can come up with 5, I believe, that paid $2 here in our neck of the woods on Friday. And with some instances of, my brother sold a pen of cattle for me to a regional for $201 on Friday. Picked up, of course. Here's another little deal you might not hear on the radio. I know that on Saturday that there was some isolated bids in Kansas for 197 for which Saturday. That's crazy. That's unheard of. 2014 like kind of stuff for next week's show list. So it still seems to be like, at least for a few of the Packers here, the scramble is on. The South was 196 to 7, which was like 4 or 5 higher last week. So really fun. Selfishly, I almost hope this market slows up a little bit and grinds higher instead of step. The next thing you'll probably hear about Packers is talking about, well, we can't make any money. We're going to slow down the kill, which I expect they're going to do. That's what they did in 2014 when the supply gets real tight. There's not enough to go around. So that'll prop up the box beef market. And as currently as we are here in the north, at least, you can expect to hear the noise from the Packer that they're going to slow the kill down.
All right. So 7 higher weeks of cash. You sound like you think we're going to make 8, and it's really about these tight supplies. But we're going to be into some formula cattle too, aren't we?
I think we'll be higher again this week, steady at the very least of it. I think that, again, domestic demand has proven to have been very, very, very robust. And, Packer can talk about slowing the kill down, but if everybody else is running, he doesn't want to lose market share either. He's in a difficult position. Cow slaughter down a mile, 18 or 19% for the year. So this need to find the grind, hamburger type meat is very real. And demand for that has been almost unprecedented how good it is. So I guess I think steady higher. I think there's a shot at 202 on the right kind here in the north. And then we'll see. I don't know. It's easier for me my suggestion would be it's easier to follow the trend is to try to think you're smart enough. At least I don't think I'm smart enough to know where the high of this thing is, but I do not think we're there. And don't forget, futures are really a big discount. Even though we're 200 higher, we're still way discounted to the cash here in the fib cattle. So I don't know. I think that maybe it's time for the guys that are short to be just a little bit nervous.
Yeah, no doubt. And I was going to mention the futures discount to the cash, but talk about, there was a lot of people talking on Friday about, hey, maybe the top is in, maybe this was a blow off top, and it looks like we're trying to negate that at least here this morning.
And that's the way cattle top. Okay.
Yep.
You go straight up and then you have a hook reversal, key reversal, whatever. I mean, V tops, V bottoms would be very typical. Now, I'm very relieved too to see the market, not following through. Okay. So, what I was taught 45 years ago that an important reversal is it has to be from a terminal area or an important area. Well, there's nothing more important than new contract highs. It should be on high volume. It was huge on Friday, the volume, and the open interest was up a bunch, like I mentioned earlier. But then the third thing is it has to have follow through. Now, so far, this thing hasn't had any follow through. We've come right back sharply. There was a little bit of a option thing that was going on Friday. There was some expiring calendar options. The January options expired. And when the market runs that fast and runs through strike prices, anybody that's got short calls, for instance, is forced to buy futures to try to get themselves neutralized. And I sure think that was part of the volatility here on Friday. So it's nice to see the market respond. We have increased open interest, a lot, 15,000 almost in the last 2 days. So it is important that we keep going higher. You don't want to strand those last guys that got long up here near the highs because they're close to being panic sellers too if it doesn't follow through. So, hey, be judicious with your marketing. It's a high price. It's a volatile market. We're overbought. I don't know where the top of the thing is. I've been a big put player myself against inventory because I think the market has upside potential. But use your head.
All right. And the tightest numbers you still think are ahead because of what you just mentioned earlier about the slaughter numbers being lower. I think the bears you talk about just keep coming back to, the weights are higher than they were a year ago. Is that where that bearishness comes from?
Well, the grill in the room are the weights. I struggle to explain it either. I guess I can explain a decent chunk of it. I think when I look at the regional breakdown of the weights, the big aberration, if you would, is in Texas and Kansas. The weights are much bigger than normal. They're about average in Iowa, a little bit higher in Nebraska, but not a lot. So what's going on there? I think a couple of things are in play. One is I think that the packer, with their relationship cattle, they want pounds. The only way to get pounds when there's less cattle is to have your formula guys make them bigger. I think that's part of it. But I also think there's a little bit of a story on these Holstein Angus cross cattle that have been so predominant across this, well, here too, but mostly across the South. You think about the kind of cattle that those are replacing, compared to like a Mexican cross steer that would be super hog fat at 1275. Now you got a Hogs cross cattle that probably is going to weigh 1,500 pounds. So maybe that's some of the story. But
the winter weather now should take care of a little of that, right?
I think you're right, and it's a great point. I wouldn't be at all surprised to see, if you're an old guy like me, the bloom come off of these cattle. They haven't had a bad day until this last round of weather, and the weights are declining and have been for several weeks in a row. So maybe we can take a swipe at getting those weights a little closer. Tighter numbers are still in front of us, absolutely. I think your listeners would be surprised to hear what the actual slaughter year to date is for some of these fed cattle numbers. It isn't actually down that much at all.
No doubt. Okay, hog market. Looks like the funds have been liquidating. We check out the 100-day moving average on Friday. How much lower do you think we're going to have to go here?
Well, it feels to me like we got some more to go just because of the magnitude of the rally, the size of the fund long position. Now it's come down some for sure, but they're not out. And now you're just starting to get some of those signals that does trigger a long-term fund, and that's the crossing of the 20 and the 40 and the 50-day moving averages. So I don't know, 62% is around 75 cents on Feb Hogs. That would be measurement. It looks like a head and shoulders top to us. If you measure off the neckline through the 100-day, that projects somewhere in that 75-cent area. I know that's a lot of technical gobbledygook, but that's how the market is anymore, it seems like. So let's go with somewhere near 75 cents on the Feb Hogs and then see if we don't catch there.
Right. Grains back to the plus side. We're seeing soybeans and meal kind of lead here. Is this all about Argentina? And can we get through some of these resistance areas we couldn't get through on Friday on the charts?
It seems to be exclusively about Argentina because I have an awful hard time coming up with anything else that's any good to talk about, or at least that's bullish to talk about on the beans. I hope they rally for everybody's sake that produces, me included. But I have a, I don't know. It's hard for me to relate to the weather even in Iowa, and I live in Iowa, let alone the weather in Argentina, where we're in the late development. I'm near harvest for a lot of that stuff. I wonder, does it really matter how dry it is right now? I don't know. I'm more inclined to sell into this thing. The 100-day moving average is a big deal. That's 1019 on the March beans. I think it's important anyway. And if we can get through Thursdays and Fridays highs, which we haven't done either yet. So my inclination is if I had some old crop beans or something like that around, I'd probably sell into this rally, and maybe I'd be a little more reactive if I needed to replace those bushels if we did close above the 100-day. The corn, as I've said over and over with you and others, has a lot better story. Carryouts less than a year ago. I like the way the spreads trade. I like the way the everything I like, except a little bit of softness in the basis here, guys. The last while, there seems to be enough farmers selling on this rally, at least in my neck of the woods, that we've lost a pretty good chunk on the bait, 10, 12, 15 cents some places on the basis here on the corn. So I don't think you have to sit here and worry that we're going to run away and go to $5 or something like that. I do think we can grind higher, sort of, but be sensitive to the basis problem.
And no doubt, there's probably a little farmer selling that happened as a result of the rally that we had. We just got to get March through the 460 level here, it looks like.
Absolutely. I do like the way the spreads are tilted, though. I like the forward spreads.
Okay. Thanks so much, Brad Kooima with Kooima Varilek. That is Markets Now.